Morning, Wall Street winners. It is Tuesday, March 25th. And what's going on today in the markets? Well, I think one of the funniest things I've seen in quite some time is from Canada's oldest brewery, Moosehead, and they're out in the East Coast. They have put together a new pack of beer with 1,461 cans in it, enough for each day left in President Trump's presidency that should get you through, if you drink one a day, to 2029. And this comes on a huge skid, as you can see in the picture, and is about 3,500 Canadian, including shipping, which is about 2,500, 2,445 US. And it was just launched, and it comes with a message saying, congratulations, you are 1,461 beers closer to 2029. We can't predict how the next 4 years will go, but considering how 2025 started, we have a feeling this many beers will come in handy. So, interesting kind of spin on what's going on in the economy and what's going on in the world, and how one company is trying to seize the opportunity and make a little fun of it, but also make a little profit along the way. So there's where we are today. We can see as well that the markets did very well overall yesterday based on a hint that Trump is going to ease back on some of the blanket tariffs that he initially announced, and it will be a more strategic implementation of those. So that remains to be seen what that ultimately means, but we'll hear about that on Liberation Day, which is what they're calling it on April 2nd. But as we head into the day today, we can see a few things happening. So, first of all, if we take a look at the markets, we're in the green right now in the futures. So, we're carrying forward some forward momentum on the positive day we had yesterday. But I do caution you not to get too excited about this, because if you look below what's going on in the market and drill down, most of the data points coming in remain pretty negative. And one of those has to do with a company that we commented on yesterday that had a news announcement on earnings, and that was KB Home, KBH. And they came in and missed on earnings, missed on revenue, and really, really clawed back their future forecast. And based on that, they're down 6.5% in the pre-market. And I expect they may drop a little bit further if the same thing happens with KBH that happened to Lennar on Friday after their earnings at Thursday close. It should claw back some of those losses throughout the day, but that remains to be seen if it follows the same trajectory. But it should open, as it looks like, a fair bit lower, about 6.5% lower. Now, if you did follow some guidance we provided yesterday and bought a put on this yesterday, feeling confident that their earnings and future forecasts were going to be similar to other home builders this quarter, because sentiment in the US consumer is down and home spending is down, mortgage rates still haven't dropped to a point that is causing people to purchase new homes and or transition out of existing homes, then you would have been in the money. And I want to show you that. So I don't often open up my trading profile here, but if we take a look at a put I bought yesterday, I bought a put on KBH, and this is exactly what I was recommending you try to do or you consider doing for April 17th of 2025. So about 3 weeks, I call it a month out. And I bought that at $60. So if this stock drops below $60, I should be in the money. So although I took a loss yesterday at what I paid on it, I got in at $2.11. We should see that on open, this is going to open up and actually spin the other way and reverse to the green fairly quickly. And it should be a pretty profitable trade. So, this is the type of trade that you can make if you feel that a single stock, which is more risky, or the greater market index or an ETF that follows an index or follows a sector like the banking sector is going to go negative, then that's something that you can have a look at doing. So that's one way to play this market on the downside. So KBH had some bad earnings, and we should see the result of that open up lower at the open today. If we take a look in the Yahoo Finance app at what's going on here, you can see that crude continues to increase. So this is interesting. It's getting closer to the $70 mark this morning. So we'll see if that has a positive impact as it did yesterday, but not consistently throughout the day. It was a really rocky and volatile day for oil. But in the end, most oil stocks finished up. Gold continued to rise. And then you've got NASDAQ futures up, as we saw in the Bloomberg app. The VIX is now down almost at 17. This, to me, is super surprising. I would have thought the VIX would be moving up towards 30 as we get closer to Liberation Day because of the amount of uncertainty that is still up there, that is still out there. But it seems to be moving in the opposite direction, which tells me that a lot of people have jumped in at this point and bought the dip. And I'm a little skeptical that this is the right time to be doing that. I think we're going to see a further correction after or just before April 2nd, at least leading up to it, if not after it or on Liberation Day itself, before we see things start to turn. And it will all be dependent on the message and the announcement coming out, and then any correction tweets or more random information that comes out through social media after the fact. So if we scroll down and look through health and retail, you can see that retail actually had a pretty decent day yesterday. We've got earnings this week from Dollar Tree. There's another one that you could use this put strategy on. If we just take a look quickly at Dollar Tree, I think what we'll see here is that this stock is probably going to take a dive this week, being that all retailers have been hit fairly hard with the onslaught or the potential onslaught of upcoming tariffs. And this is going to affect Dollar Tree, is just like it's affected Costco, it's affected Walmart, all of those stocks being down. Take a look at the 5 day here. It reached a high up in the 70s for the 5 day. The 1 month, it was down as low as, say, 62, 61.89 here, and it's now back close to 70. So if the markets go green today and this stock goes green and moves higher, this would be an opportunity to buy a put against this, knowing that or having confidence that earnings, revenue, and future forecasts will likely be off on this company. And if it is, then that stock should drop and you'll make money on that put. So, one thing to consider for today's trading. We look at other stocks here. Nike's been killed after earnings. It's really low. Healthcare's done pretty well yesterday, but for no real reason other than I think the overall market lifted it. Transports got lifted yesterday, and again, for no good reason, because this industry, this sector is in the tank right now. And with where we're at or with the tariffs, I don't foresee that they're going to have any meaningful results this quarter. So I think that these are going to get hit again when their Q2 earnings come out as we rolled into April and May. Then we get into oil, and across the board, it's fairly green. Con Ed was off $1 yesterday. It looks like it's making that back in the pre-market. Vistra, part of the utility sector, doing very well, up $4.36 yesterday. And then the other oil companies as well. So you can see from the charts, not just the numbers on the right, but it was a pretty volatile day with a lot of up and down movement. But in the end, most of them finished in the green and to the positive. And then crude up again today. I think we're going to see the same thing in oil. So if you do track or invest in oil stocks and one is maybe not climbing as much as some of the others, it might be an opportunity, for example, with Occidental Petroleum, which is only up 21 cents. It was down yesterday. That might pop more than some of the others today. We get down into technology. Technology had a great day yesterday. You can see a lot of moves in the technology sector. But one interesting announcement this morning that is a little bit concerning came out of Alibaba in China. And Alibaba, and I believe it was their chairman, said that he feels that there's a bit of a bubble starting in the data center build out space around AI. He feels that there's overcapacity. And it's an interesting statement. I think it has to be looked at through multiple different lenses, one of them being he's a chairman of a Chinese e-commerce and AI company. So certainly a different market and maybe not as global as some of the US dominant tech companies with data centers around the world. Although obviously Alibaba does have data centers in different geographies, but catering to a slightly different market. You also have to look at some comments coming out of Microsoft, Meta, Google, Amazon, all of whom were saying they were running out of capacity. So the bubble may be geographically specific as opposed to globally applying globally. So, but something to just continue to keep an eye on and listen for in different quarterly updates this quarter. We can see as we scroll down, one company that didn't do well is Broadcom yesterday. Out of all of the companies that were in the green, and the majority of the tech stocks that we follow were in the green, Nvidia had a great day, up almost $4 yesterday. Meta up $22.50 yesterday, and up almost six in the pre-market. And we'll come back to Tesla in a second. But Broadcom really got slammed yesterday, and I'm not sure what the reasoning was behind that. So I think that, I mean, this is a company that had phenomenal earnings, revenue, and a future forecast that was positive, but it got hit. So we'll have to see whether that turns. Another company that made back some ground yesterday, I know I'm scrolling all over the place here, is Micron. And Micron did have some great earnings. And I said yesterday in yesterday's video that I thought this stock would get back to $100 this week, if not 105. But it's not quite there, but it got up to 97, a little higher than 97 yesterday. So we'll see if that continues to move forward, which I believe it will, based on the positive trajectory that it's on. We can also see that as you scroll down, Baba is down $2 in the pre-market and off slightly. Nvidia is down slightly, but most of the others are in the green as we head into the open. And then financials had a good day as well yesterday. So if we take a look at financials, you can see Apollo had a great move forward and upward yesterday. SoFi made a good comeback yesterday. And then the big ones, JP Morgan, Morgan Stanley, and Goldman all had good days, and looks like they're off to another pretty positive start for the day today. The one tech stock I did want to come back to, because there is a lot of headlines on this one, is Tesla. And Tesla has just announced their February sales. They're off 40% in Europe for February. And yet this stock jumped almost 12% yesterday and is up almost 2% today. Kathy Wood, ARK Investment CEO, or I think she's the CEO there, maybe the CIO, but either way, the main investor at ARK Investments came out and said she still believes Tesla in 5 years will be a $2,600 stock based on the robotaxi element of their business. I think that as long as Elon is associated with Doge in the US, and even after that, until he really remakes his persona in the marketplace and to consumers, this stock is going to get trampled on when it comes to earnings this quarter. So as they approach earnings, which are coming out at the end of April and into May, I think we're going to see another big slide to the downside. And this, again, could be an opportunity as this continues to climb to buy a put against this as it heads into earnings. I think we're too far out from earnings right now to do that. But as we come up to Liberation Day, there may actually be some positives for Tesla because they manufacture exclusively in the US for US consumers. And although they do import from China, I think the majority of their production is in California and Austin for the US or North American markets. So they may actually get a bit of a pop based on that and the avoidance of tariffs, unlike the other car companies, which are about to be slaughtered as we head into the Liberation Day on April 2nd. That, or after April 2nd, I think we may see the numbers actually roll out for Tesla sales. And I think they're going to be pretty poor for the quarter. And that may impact them not just this quarter, but I think they could be poor into the next few quarters. A lot of that will depend on whether the US moves into a recession or not. But if it does, and it's looking like it could, based on consumer spending and sentiment, I think that's going to drive this stock down. So playing this as a put and betting on the downside as we move towards April 2nd, Liberation Day, might be a strategy for you to evaluate. Anyway, that's where we are today. I hope you're liking the videos. And if you are, please hit the like and subscribe button. Good luck in your trades.